right, Michael, before we get into everything Bitcoin, I want to start off with the world's second biggest crypto asset, Ethereum, because big news of the week is that Ethereum has been reaching new record highs. Market cap or value of the Ethereum network is now bigger than that of major companies like Procter & Gamble, Bank of America, and PayPal, just to name a few. So, Michael, what is your position on Ethereum now? Are you bullish? Are you bearish? What's your outlook?
I think you can divide the entire crypto world into crypto assets and crypto applications. And so crypto asset networks are meant to store a long duration safe haven asset for a decade, a century, a millennium. And Bitcoin is, of course, the leader in that space. I think crypto application networks are meant to do lots of different things. It might be DeFi, it might be NFT, it might be operate stable coins or provide very flexible application rails. Ethereum clearly is the leader in that space. I think that there's a whole set of investors that are interested in investing in applications. That would be different than the class of investors that are looking for an asset. For example, corporate treasurers or widows and orphans insurance funds, they just want to store their money for 100 years and they don't want complications. But, you know, the world's full of tech investors and venture capital investors that are always looking for the latest, greatest, cool thing. I think that, from my point of view, the application space it's going to be a bit riskier because of more centralization, more complexity, and more competition in the space. But, you know, that means that there'll be higher highs, lower lows, and a lot more fireworks along the way.
So you still clearly maintain your position that there's no comparable asset to Bitcoin, that Ethereum is in a whole other category. As you just stated again, it's the unicorn categories, you referred to it before. But are you at all interested in getting into the unicorn application category? Is that something that you would personally invest in or use MicroStrategy cash to invest in?
No, I don't think it's appropriate for a corporate treasury, and it's not really appropriate for us. Our business is to acquire and to hold Bitcoin. I think that crypto applications would be appropriate for crypto venture funds and crypto-specific technology investors.
Do you have a position, though, on where you see the price of Ethereum going?
I really don't. I prefer not to opine on things that I am not an expert in. And I have a lot of very strong opinions about crypto asset networks and the right architecture for a crypto asset network. For example, I think that a proof of work architecture is appropriate, if not critical, for a good crypto asset network. I don't have strong opinions about what's the appropriate architecture and then what's the likely outlook in the crypto application space. I think there are too many variables. It's, again, as I said, it's much more complicated.
Okay, well, you certainly have a very strong opinions on Bitcoin. That is clear. And you've been advocating for the so-called Bitcoin standard. What do you mean by that?
I think that there's $500 trillion of monetary assets in the world, split between currencies, bonds, real estate, instruments, equities, precious metals that are being held as money, etc. Most of those are fiat derivatives, and so they derive their value in part or in whole from the expectation of future fiat cash flows. And I think right now in the world, you have a set of strong currencies losing 1% or more of their value a month, the US dollar and the euro, and everything pegged to the dollar and the euro. And I think you've got a set of weaker currencies losing 2% of their value a month. And then you've got a set of currencies that are collapsing, that are losing 3 to 4% of their value a month. All of the companies and the bonds and the commercial real estate in those economies are, of course, losing their monetary value because the currency that they're valued based upon is weakening. So the Bitcoin standard is all about converting your long-term treasury assets, that is your savings account, from a fiat derivative asset to a non-fiat derivative, a non-sovereign store of value that doesn't derive its value from cash flows in the future. And the 19th century solution was the gold standard, and the 21st century solution is the Bitcoin standard. And so that's what I mean when I say adopt a Bitcoin standard.
I guess the bigger point that I'm trying to get to, Michael, is that Bitcoin to some degree has to be some kind of a threat to central banks, to governments, to treasuries. It's not likely that they're just going to give up control over their currencies. And there is this notion that they'll use this angle of anti-money laundering, terrorism funding laws as a way to crack down on it. We saw Turkey's central bank banning the use of cryptocurrencies and then adding it to the list of companies affected under anti-money laundering and terrorism funding laws. And not too long ago, U.S. Treasury Secretary Yellen said that the misuse of cryptos like Bitcoin for terrorism is a growing problem, and that the National Defense Authorization Act requires to be updated with regards to money laundering and countering the financing of terrorism. Now, whether she's put in the 40, 50 hours of work to really understand what's going on or not is another matter. The question is, will they use this angle as a way to potentially crack down on Bitcoin?
I think that people that spend a few hours poking around in cryptocurrency, they oftentimes come forward with this observation that the cryptocurrency is a threat to a central bank and they have privacy concerns and the like. But it's generally only those that are spending a few hours. If you spend 100 hours or enough time to understand the situation, then you start to embrace a more sophisticated model, which is money can be decomposed into a currency component and an asset component. And these aren't really cryptocurrencies, they're crypto assets. And Bitcoin is a crypto asset, it's not a cryptocurrency. Currency is defined in the law as something you can exchange as a medium of exchange or in a transaction without incurring a tax obligation. So Bitcoin hasn't been a currency by law in the United States since 2014 when the IRS determined it to be property. And that's well understood by the regulators. And I think that if you look at comments, public commentary by Jerome Powell, by Christine Lagarde, by the deputy governor of the China Central Bank, by Gary Gensler, they've all commented that this is a digital asset. It's not a digital currency. And if you read the 140 pages of testimony by Janet Yellen, you'll see she's a very progressive, informed regulator that understands that crypto assets or digital assets like Bitcoin are a cornerstone for a 21st century economy and a force of good and can be used as a force of good. And all regulators will state as a matter of fact and because it's appropriate that, of course, we have to make sure they fit into a regulatory environment and a framework so they're used for good and not by malefactors. So all of these conversations are oftentimes just cherry-picked comments. Neither the head of the EU central bank, nor the head of the US central bank, nor the head of the Chinese central bank has actually suggested that people should be banned from owning the asset. And in fact, in the example of Turkey you named, what they said was they didn't want people to use it as a currency. That's no different what the IRS said in 2014 in the US when they actually taxed it on transfer. They also effectively said you can't use it as currency. So basically stating that we don't want something to be used as a currency because it threatens our currency is not the same as depriving people of an asset. And even the Turkish central bank hasn't deprived or hasn't limited Turkish citizens from owning the asset. So I think that it's very, very important to understand that the future of the world is 8 billion people with mobile wallets with a currency layer and an asset layer. And the currency is going to be the dollar and the euro or the Chinese yuan. And the asset layer is going to be Bitcoin and then whatever other assets you chose to hold in them. And the government's provenance, or the government will of course demand control of the currencies. And where you have strong governments like the EU and China and the US, they will have a strong currency and those currencies will be successful. And where you have weak governments, like in Venezuela or Zimbabwe, you will see the currencies collapse. They will lose their currency privileges. The citizens in those countries will download stable coins that will either be the US dollar or the Chinese renminbi. And the underlying asset framework or asset protocol and network that we use to synchronize all of those wallets is going to be Bitcoin.